There's a very famous saying, which is if you're the smartest person in the room, then you're in the wrong room. Well, luckily, I have three people much smarter than me today who are going to share their insight on what's happening with Bitcoin, the crypto market, macro in general, and what we can actually look forward to over the next few years. I think that we've focused largely on the negativity and the bad things that have been happening in the market for the last few months. And it's time to really take a turn and start focusing on the things that we are excited about. I have Matt Hougan, the CIO of Bitwise, Jeff Booth, visionary technologist, VC, author. I don't know, Jeff, you're everything. I don't even know how to describe you anymore. I'm going to just do it different each time. And of course, Oliver Lynch, the CEO of BittrexGlobal. His name is not Oliver Link. It is Oliver Lynch. Guys, you do not want to miss this one. So excited. Let's go.
Let's go.
What is up, everybody? I'm Scott Melker, also known as the Wolf of Wall Streets, and all of a sudden I cannot hear through my AirPods. What's happening there? That is the situation. So I'm trying to get my audio sorted at the moment. But as we do that, I'm going to just go ahead and bring on all the guests. I'm hoping that you guys can hear me because right now I can't hear you. But I'm going to go ahead and just dive right in the very beginning here with Matt. Right, because Matt, as usual, I tweeted that we were going to have a roundtable today, and you got me very intrigued. Your response was, "This is going to be so fun. I'm so bullish on the next 3 years in crypto, and I can't wait to share why." Well, now is your opportunity to go ahead.
All right, thanks, Scott. Well, thanks for having me on, and good to see you, Oliver and Jeff. Really excited for the conversation. Yeah, I am epically bullish on the next 3 years. Look, if there's one thing we know about crypto, it's that it's cyclical. And it's cyclical historically with a 4-year pattern. We had great run up from 2011 to 2013 and a pullback in 2014. We had a great run up from 2015 to 2017 and a pullback in 2018. And again from 2019 to 2021. And then we all suffered through last year. And those cycles happen for a reason, which is there's a major technological breakthrough that drives a new bull market. And then we overreach and reset. The first cycle was driven by Bitcoin. 2011 was when Mt. Gox launched, when Coinbase launched. People could buy Bitcoin for the first time. Massive run up, fueled a lot of developer activity. The next cycle was the breakthrough of Ethereum. Ethereum created in 2015. Everyone got very excited. Massive run up, then regulatory crackdown. The last cycle was the creation of NFTs, DeFi, and stablecoins, right? That's what excited the last bull market. The reason I'm so excited is because I know what the technological breakthrough is, I think, that's going to drive this next bull market. And it's bigger than NFT, DeFis, and stablecoins. And I would argue bigger from a real world application than even the first start of Bitcoin and Ethereum. And what it is scalability. It's the layer 2 epoch. If you look at crypto, people have always wondered when it was going to go mainstream. It couldn't until I think this year. If you think about how it tried to go mainstream in 2020, it broke, right? The cost of a transaction on ETH hit $200. You can't go mainstream if it costs $200 to do a transaction. But if you look at the pace of progress in blockchain technology, the fee to do a transaction has gone down from like $3 to $1.50. It's maybe 12 cents now. By the end of this year, after 4844 on Ethereum, it's going to be a fraction of a penny. And the things you can do when it's effectively free to use a blockchain are so interesting and so exciting and allows you to get into mainstream use in such a major way that I think this is the 3-year cycle where crypto actually penetrates the mainstream, where it actually is used by people who are not listening to this podcast, where it's used in everyday activity. And you're seeing that even today. This morning, I woke up here on the West Coast, still dark outside. And we have Coinbase launching its own layer 2 through Base. This is a massive step from crypto being a niche application to being a mainstream application. It's happening right in front of our eyes. It's happening at an accelerating rate. And I think it means that this bull market cycle, this 4-year cycle, is going to be the biggest cycle yet in terms of user adoption, in terms of aggregate market cap increase, in terms of almost all of the things that we care about. It's not going to be perfectly up and to the right. Of course, there'll be bumps. We can talk about regulation. I'm actually bullish on regulation. But you can see what's happening and you can feel it. If you're in the dev community, the level of excitement is higher than it's ever been in my experience in the crypto market. And that's why we're up 50% this year. And that's why I think we'll close higher by the end of the year. And I think 2024 and 2025 are even going to be better.
I think the 4-year cycle is a really interesting topic, and I'm going to preempt this for you, Jeff, and then let you speak. You can eliminate all of the noise from that, and that cycle is still inherent just to Bitcoin, right? Even without all of the other things that you discussed, Bitcoin has the 4-year cycle because of the halving, and those cycles continue to be somewhat bigger and bigger. And what you described for adoption, I know Jeff's going to jump in here. The Lightning Network also is now extremely cheap. So I think this is the first time that maybe Bitcoiners and Web3 folks are aligning on exactly what you just described. Jeff, I'll let you discuss.
Yeah, and Matt, in respect, and again, everybody's going to have a different view, but I have a view that at a base layer, at a fundamental layer, that if money is not the existing system we live in is just based on corrupted money, right? The existing system, the world is deflationary. Technology creates deflation everywhere, and the only reason inflation exists, in other words, theft of your money, is because we give it a system control of manipulating our money. The only reason. Otherwise, prices would fall everywhere. But we won't vote for prices to fall, right? We won't vote for less money next year in our income, even if it meant real wages going up. So we want to believe the lie that politicians can keep on giving us more money when they're actually taking money from us. And that transition and what that viewpoint, when you have misinformation and money spreading around the world, and all money is information describing what you really want, then what Scott said in the opening is you must have misinformation everywhere. So unless you solve that at a first principle level at the money, then nothing else matters. And what Bitcoin did is solve that from in layer one, and solved it in a way that is decentralized and secure. But to do that, they had to make trade-offs, because you'd have to expect, if the world we lived in was 10,000 times bigger, 4 orders of magnitude bigger than Bitcoin, then you'd have to expect the entire world, all of false flag operations, everything from the people who controlled money to try to kill it, right? You'd have to expect that, because there's so much power in owning money. And all Bitcoin did on layer one was that, and it grew really fast. So obviously, if it only did that, it would create, and a lot of people early on in Bitcoin were getting wealthy in Bitcoin and by holding it, but you couldn't build on top of it. Then everyone would say, oh, wow, there's a really great, I can create the next blockchain crypto, and I can change this a little bit, and I can add scalability to this. But that scalability comes with the risk of centralization. It comes with centralization because of the trade-offs of it comes with centralization or lack of security, one or the other on L1. And so all of the other cryptos lay in that they have to be centralized by design, or they have to be insecure. And then on top of Bitcoin, because it's a protocol, and on top of Bitcoin, Lightning then it emerges, and you can't see what's not there until it emerges, right? But layer one is hardened, and then layer two comes out, and we're not waiting for next year for fractions of pennies. The Lightning Network is exploding in sats right now, exploding in growth, and then Nostr comes in, and Nostr is actually, I don't know if anybody's looked at Nostr. Go create a Nostr account now. It's like a new peer-to-peer web with native money of Bitcoin inside it, and it's exploding. And so it removes that centralization of big tech, and there's nothing big tech can do to stop it. And money's native to it. And if you want to see how fast money is moving around on value for value globally, so I'm super bullish, but unfortunately, I think all crypto, all blockchain, all of that, I think it all goes to zero except for Bitcoin. And on top of it, and it does because of the design, because a network effect on a protocol layer that decentralizes and secures, and it is secure on top, and then you have network effect on the next layer on top as well, moves the innovation to that layer that gives the most value.
Oliver, what do you think? You're on mute, buddy.
Yeah, 3 years of doing this, I still haven't got used to the simple buttons at the bottom of the screen. Look, I think the reality is a little bit different from the theory. I think there's a lot of ideological conceptions about exactly what Bitcoin was and is and will become, and it feeds into the same sort of ideological macroeconomic theories that we've had about money since, the really early days of economic analysis. And, you read the same thing that Hayek wrote about, currency, fiat, and the difference between fiat currency and then gold-backed currencies. These are the same discussions that are being had. And I think it's possible to get too wrapped up in that discussion and lose sight of what it is that people actually want these things for and want to use them for. And so I don't think I agree that everything except Bitcoin goes to zero. In fact, I'd probably say the opposite. I'd probably say as scalability increases and use cases increases, all of these communities, all of these projects that we've been promised for so long, but in many cases have failed to deliver, are actually going to deliver. We're going to see use cases and communities and projects, not just based on Bitcoin, but based on a whole range of other tokens, really developing and blossoming. So look, I don't know if scalability is going to be the silver bullet that Matt thinks it is. I mean, I'd like it to be, but I think we are already seeing the bridge between the real world and the theoretical world, that gap being bridged. So I think that's what we're going to see, and I think it matters less the theory behind that and more the practical realities on the ground for individual users, and especially for big corporates that want to get involved into crypto.
So I just want to pick up on that because if the world had never had money that could be decentralized and secure, and you always had to trust organizations, trust people that then change the rules on money, or it's centralized with gold and then somebody would change the rules. If it's true that you had a money that was decentralized and secure by design, then that would obviously change all the future. And looking through the past of all these ideas, Hayek and everything else too, they wouldn't have even, if they had a theory, they wouldn't have been able to make it happen because the money wasn't tied to energy or to, so if there was a change, and you'd have to go to, is that change Bitcoin? I would agree with that. If there was a change, then all of our previous models would be wrong because there was no way to deliver that. And that's, Oliver, in respect, I disagree, and I disagree quite strongly because I haven't seen a valid economic incentive to use a centralized blockchain because of what would happen with that centralized blockchain. I haven't seen a long-term economic incentive that actually matters because it's a higher cost and it centralizes over time. So if failing that, unless somebody can show me why I would want to build DeFi, decentralized finance on top of centralized finance, it's like our existing regulatory system today that says we're going to protect you from losing money from a system designed to steal your money, right? Because that's what it is.
Yeah, Oliver, if you want to jump in, go right ahead. Or
No. After you, Matt. After you.
I might try to I actually split somewhere in the middle, believe it or not, Jeff. When I think about all of the applications that can be designed and implemented on blockchain, I think there's a scale to which centralization and decentralization matters. So if I think about something like truly non-sovereign money, a digital version of gold, if you want to use sort of common layman's shorthand, that has to be centralization. Centralization is all that matters, or decentralization is all that matters in security. And so from that perspective, there's nothing that will ever challenge Bitcoin. And I would add that from that perspective alone, it leaves me extremely bullish on Bitcoin, right? It tells me that Bitcoin's current price is wrong. There's a world in which it's worth zero, in which case it fails. And there's a world in which it's worth a very, very lot, in which case if it succeeds. And its current price is like an unstable equilibrium, only for that single use case. And as you walk down from that use case to some of the more non-monetary use cases, maybe like Farcaster or something, the degree to which decentralization matter decreases, and the efficiency and network effects of certain other blockchains and the ease of programming on certain other blockchains matters more. And so I think there's I think inherently the world is the future is unknowable, but my best case scenario is that there'll be blockchains that are optimized to put decentralization and security first, which are used for these non-sovereign money applications, and Bitcoin will be that. And there will be other blockchains that take on other uses where decentralization matters less, and they'll be less decentralized. It's not a binary to me, it's a spectrum. And those will probably thrive as well because they're easier to program, or they have a bigger developer community, or they have more venture capital investment, or they're more comfortable for regulators to incorporate into the real world. And in the middle, we'll fight over things. I
think that's the answer to Jeff's question, which is like, Jeff said, well, convince me that I would ever want to build a DeFi system on top of a centralized system. And the answer to that is, well, it might not be theoretically pure, but it's easier. You can do stuff with it, right? The reality is, and you got to remember, the vast majority of people, even if they buy into the theory of decentralization, most people are annoyed at the current system, but aren't purists. They're not theoretical absolutists. And if they can achieve what they want to achieve in a meaningful way, in a quick way, they will be happy with a certain amount of impurity in that system. So again, it's the difference between theory and reality.
Yeah, and let me make your point. Like in what you're saying, I totally agree, but it actually also creates a whole bunch of leverage and people that will just chase money and get wiped out because they don't know, they're not as deep in the structural level of this or the technology of what's going on inside it. So they're trusting other people in an ecosystem with money to make inside of one of these, and marketing budgets to be able to do that, and they're not sufficiently knowledgeable on the differences. So I agree with you, and if they think that they can make a whole bunch of money, then the market will go there as fast as it can, and it'll lever there. So that we agree on. What I'm talking about a deeper level. I'm talking because I think I'm investing in this space. I'm investing in, and so I've seen, our team has done diligence on 400 different companies through Ego Death Capital. We've invested in 5, and so I see what's coming. Not on so today, there's most people probably listening to the show do not have a Bitcoin Lightning wallet and are trading money around the world at the speed of light for a fraction of a penny, a fraction. And how fast that network effect is growing on layer 2. So they're still talking about Bitcoin like Bitcoin was 5 years ago, right? The decentralized secure money, and let's do all this other stuff, easy stuff everywhere else. And they don't even know what's actually happening, how fast that network effect is growing around the world, how fast trade of value is happening on top of this. If they don't know that, and what's happening, they also probably don't know about Nostr and all of the clients and everything else. And you can create a private key on Nostr, on any client on Nostr, and then if you have your followers and everything else on followers, then that company, that client, if you used Damus or Astral or anything else, doesn't own you. If you don't like that client, You just move it to another client and you have all your followers, all your data, everything else. So it's not a walled garden of tech. So you have a new peer-to-peer internet being built from the ground up with Bitcoin as a base layer. And many of the things that you're talking about being able to open up in other blockchains already exists, and it's exploding in this network, in this peer-to-peer network. And what's coming, some of the stuff that we're investing in that's coming on top of this that people can't see today because it's not out yet, is just native, and it's another puzzle piece that just explodes that growth. So Matt, I'm really bullish, like massively bullish on this transition, and I understand if you didn't know some of these things, what it would look like from the other ecosystem. And I'm not mad about it. I'm a Bitcoin maxi, but I'm not like, I don't yell at other people on their point of view. I just have a different point of view, probably because of the ecosystem that I'm seeing, and the economic rationale for that ecosystem and how fast that's going to grow. And maybe I'm wrong.
Well, you and I actually agree, Jeff. I mean, I run index funds. The biggest holding in the index fund is Bitcoin. It's 68% of the index as well, right? So you and I agree. And I think what's happening on Lightning is extremely exciting. I think what's happening with ordinals is extremely exciting. I think the ecosystem around Bitcoin is evolving in ways that many people didn't expect. So you and I are actually quite sympathetic around that. I think it speaks to sort of a shared acceleration in the capabilities of blockchain that is being missed by the world. People don't understand how tech scales exponentially, and so they apply linear assumptions and they miss it by a factor of a lot. Yep. And I think that's one of the things that's happening right now, and why people are so confused why the market's up 50%. Because whether you're in the Bitcoin ecosystem or you're in the Ethereum ecosystem, or even if you're looking at layer 0 ecosystems, the same sort of stuff is happening, which is the tech is getting better. The only place you and I differ is whether, I have an almost agnostic view of how the world will develop, and I have a sort of a different view on the absolute requirement for absolute decentralization. And so I'm sort of an agnostic crypto investor who holds all of the assets on a market cap basis. But I do think the important thing is that this technological evolution and expansion of use is happening across the ecosystem, and it's increasing the addressable market for crypto and public blockchains extremely rapidly. And that's to get back to it, Scott. That's why I was so bullish.
Go ahead, Donna.
Sorry, no, Scott.
I was just going to say, it sounds like for the first time, we're somewhat seeing alignment from all the communities on the grander vision, and just now it's brass tacks on where it happens and how it happens. I think I'm kind of more in the middle, but I do agree, Jeff, when it comes to the money and DeFi, it would be ideal if that was built on Bitcoin. But I'm also not sure that we need to build games on Bitcoin, right? And perhaps if there's another use there and we don't really view that as money, it's more a utility in the technology.
I guess just if you just double click on that, if the Lightning Network, I agree, if it didn't exist before, just like TCP/IP to the internet, you couldn't see what was the next layer until the next layer was there. So you couldn't build games onto that. But where would you build a game if you're an entrepreneur building a new game, and the Lightning Network right now is a fraction of a penny, and you had a bearer asset underneath that was decentralized and secure forever. Or versus a choice of building a game on something that was centralized and cost more money, where would you build a game?
I mean, I think I understand your point. I think the answer of where people are building games is on Ethereum and Ethereum-based layer 2s right now. That's where the bulk of the venture capital money is going in. So I understand the theoretical point, but it makes me excited about Bitcoin. So I appreciate you sharing it. But it's also the case that like the purest technology stack doesn't always win in these applications, right? Like my family had a Betamax growing up, better tech.
It was better tech, by the way.
It was better tech.
It was better
VHS
tech.
one.
Tech.
Yeah. Yeah.
But VHS1, and so like, and that lesson has been repeated multiple times throughout history. So I just say that because there are multiple factors at play here, including network effects that are specific to the Ethereum ecosystem, which I think are pretty strong. Doesn't mean it will win long term. Again, I would hold both, but I think that's the if there's a gap between us, and I think mostly we're both just very excited. I think that's probably.
I would certainly want the in-game currency to be Bitcoin. If that's somewhere that we could align, if it's going to be a monetary incentive and there's going to be actual money involved, it's not about the speed or the utility, then I think everyone would be in agreement that Bitcoin would be the ideal money for that. But I want to actually go back to the idea that you presented first, Matt, which is that scalability will be sort of the catalyst for the next massive 4-year cycle. I don't disagree, but to me, that's more of an infrastructural or picks and shovels approach or view. And even if we have the scalability, we still need the people, right? We still need the users. We still need the adoption. We still need people to understand. We still need people to care. I mean, you listen to Jeff obviously describe that people just don't know what's coming. Well, it could take many, many years for people to understand and for us to convert the people that don't listen to these podcasts. So I guess the next question is, if we've actually built this where it can operate at scale for the first time, how do we actually get the billion people to come in and use it and care? And any of you can jump in.
Yeah, I have views, but I've been talking a lot. Oliver, go ahead.
I think my views, if I'm going to come up with a buzzword, is respectability. I think for far too many people that aren't involved in crypto, they're still regurgitating 2016's buzzwords, which is that crypto in general is not respectable. It's basically just used by drug dealers and bad actors. And all of the big scandals from last year, there's one thing that people know about crypto from 2022 is you're going to lose all your money and there are loads of bad actors in play. And I think until we as a community can shed that reputation, there's never going to be a mass adoption. Even if, Matt, you're right, there could be, even if scalability is what allows that to be, it just won't happen. And so this is where I think, and actually, Jeff, you mentioned regulation. You said you were bullish on that, as am I. I think seeing all of these things within the context of wider financial services is what brings that respectability in. And even though it might be ultimately the end goal to destroy old conceptions of the way money works, borrowing the respectability or the apparent respectability from it is the path to adoption. So that's what's going to get people interested.
I love all that. I think there are 3 potential ways that we can look at history to see how it's happened. One way is non-monetary applications that captured the public interest. If you think about times when crypto has almost gone mainstream, there've really been sort of 2. There's NBA Top Shots and there's NFTs. And the reasons those can scale is because they tap into sort of social zeitgeist. People don't even know they're dealing with crypto applications, and there are no regulatory considerations, or at least not major regulatory considerations that choke them off. So I think non-money applications could be one of the first ways things scale, where people don't even realize they're interacting with the blockchain. Another thing that I see happening is when crypto provides a solution to something people hate. So with finance, that's one thing. A lot of people hate banks. But I do think what's happening in crypto-enabled social media, blockchain-enabled social media, is really an interesting idea of how crypto could go mainstream, because people really hate Twitter and they really hate Meta and they really hate big tech. And so crypto as an alternative to that, I think, is really interesting. And then I think a little bit what you're saying, Oliver, crypto that improves the financial system, maybe even in the background, so we don't even notice, I think is probably the third way that it goes mainstream.
Yeah, and I think both of those, sorry to interrupt, Jeff, I think when we talk about crypto being disruptive, I'm actually not sure that's really helpful, right? Because disruptive things are scary and are revolutionary and put people off. I think actually the language of this is the natural evolution, this is the next step, and it's better for these three reasons is much more likely to meet its mark.
I believe that crypto blockchain is an attack vector from on Bitcoin. Because when you conflate those two things, and they're very different things, you have to go back to money, right? And if money is it's superordinate to laws. The people who own the money change the laws, right? If that didn't exist that way, then where broken money was most evidence, you'd have the strongest laws protecting the people, right? It looks inverse. So when money is manipulated, then society breaks down, because all it is stealing money from some people and transferring to others. And we live, unfortunately, in a system like that. And we all know we live in a system like that. There's $400 trillion of debt in the world that is unrepayable. And the only way it's repayable, if we pretend it's repayable by driving inflation way up, which picks the pocket of some and transfers it to others. Inflation is wage deflation. It's the same thing. So if you have an attack vector on money, and here's where this matters a lot. A monopoly does the exact same thing over and over and over against technology. They put up walls against technology. So if you had something that was decentralized and secure that actually attacked money, like Bitcoin, then you could expect the people closest to the money monopoly, media, everything else, the existing elite, and elite is just a word for who gets transferred the most money from this corrupt system, right? They would be very against a system that removed that control. They would do everything to stop that system that removed that control. That's why it's so important from a base foundation. And so you have a whole bunch of that money creating a whole bunch of narratives around this, and then those narratives fail, and regulation goes in and says, so if you centralize one of these blockchains and the state can capture that blockchain through regulation, it's over. It's that important.
Do you think to some degree we're conflating timeframes then? That what Matt says about a 4-year cycle can be true, but with an extremely low time preference, we eventually get to the reality that Jeff is discussing, which could take 10 or 20 years to really change the money, and therefore it's sort of two separate conversations.
So let me just, that's exactly what's happening. That's exactly what's happening. And people that are close to the money monopoly, people in the US, Europe, and such, see this and everything else, because what ends up happening is monopolies change technology changes from the bottom up, and the people furthest away from the monopoly benefit from the network effect because they gain more value. So people in Nigeria, people in El Salvador, why it's exploding in these regions, people in Lebanon, people in Turkey that have massive inflation rates and everything else, why it's exploding in these regions and moving really fast there, and that technology is driving, is because it, just like Kodak invented the digital camera, or Blockbuster, or they do this exact same thing. The only difference here is the monopoly is now money, and the people furthest away from the money monopoly are going first, and they're driving this. And in US, Canada, Europe, if governments try and stop this, it's going to be the greatest wealth transfer on the planet to from Western democracies to Africa and South America and Central America. Is it because of that is the same thing? But to Matt's point before, it's exploding. We haven't talked about Fediment yet. We haven't talked about what's happening on layer 3, on what's going to be released this year, and how fast that's going to grow. It's literally unstoppable. So I'm super excited about what's coming, but I think I disagree on where it's coming. And
Scott,
that time.
Yeah, can I ask you a question, Jeff? I'm really interested in your thesis here, which is sort of, you're positing an inevitability to Bitcoin, which is very exciting. And I guess the question I have is, there's sort of two ways entrenched systems can react to revolutionary forces. One is to fall and be replaced, which I think is the primary paradigm that you're suggesting. The other one is to sort of adjust and migrate so that people under the existing system are tolerant. So you think of like how China responds to political dissent by adjusting. So I wonder which of those paradigms you think we're going to see.
So when I think about this, I think Bitcoin is a bridge to the other side that people don't know that this is actually happening. And so it's when I think about this, I think about if your view of the world was you were an executive at Sears from 1995 to 2010, your world was contracting. It was getting worse and worse. Same world. But if you were at Amazon, that world was everything was going great. That's what we're dealing with here. We're dealing with inevitable breakdown of a system, but we measure the system from the system. We're inside the system. And it's hard to see a new system emerging and what's happening in the new system. And in the new system, what people are thinking that's happening isn't happening. They think Bitcoin price is going up. It's not. All prices of everything are falling against Bitcoin forever because technology globally in energy and everything else is deflationary. And when you stop manipulating the money, prices fall against it. They just think it's going up, just like they think their house is going up, but it's actually coming down in real terms because you're manipulating the money base underneath. So Bitcoin, because it's outside of that system of manipulation, it's being mismeasured what's happening because people are measuring it through their existing system.
Yeah, I mean, there's easy proof of that. It's about the denominator. If you look at the value of Bitcoin versus the currency in Venezuela or Argentina or Lebanon, it's making consistent all-time highs, right?
And those breaks, Scott, we just don't think it's going to happen here because it hasn't happened here as often as it has in those regions, right? Yeah. But it's coming to us. It's coming to a town near us.
It's funny to laugh, but it's hard not to. And one of the other themes I've heard everyone talking about, Oliver, I loved your point about respectability, right? It sounds like the crypto industry needs a new PR agent or something. But that doesn't matter if what both Jeff and Matt just said comes to fruition, which is effectively that we abstract away the Bitcoin and crypto and all of it, and these just become functioning products that people use because they're better and they happen to be built on it. But like, I don't think we want the term NFT. It's a complex technical term. It should just be some sort of asset that people are trading, something they value. So I think that when we start getting rid of all this terminology and things work, even though they're built on blockchains in the same way that people are familiar with in Web 2, that's when, for me, we start to see mainstream adoption. And we can argue over what that should be built on. I think we've had that conversation. But we need to abstract away the term crypto. We need to abstract away all of the complicated seed phrases and all of these things over time for most of these things so that your average person can even use it. And then they won't even know it was crypto or care that we have bad PR. How that happens, I don't know.
Scott, can I reinforce something you just said? Most people living in the system, measuring by the system, thinking that they're going to work to pay for their house and everything else, and what's happening with the inflation rate and how that's all manipulated. They don't understand the plumbing of the system. They don't care. They care about what they live every day on top of that plumbing. Until the plumbing is so broken that it's producing terrible results, then they start to think about the plumbing. And even then, they don't think about the plumbing. They abstract the plumbing away and they say it's that person. That person's going to change the everything, or that person. And our political system on top of broken money is just theater. It's just theater, and people are reacting to that person. But again, they don't go deep enough on the plumbing. So I do, right? And I wanted to understand the plumbing of the existing system, and if it had any way out, if it could fix itself. And I realized it couldn't fix itself. It's impossible. There needed to be a transition mechanism. But then I went all the way to the bottom on Bitcoin and everything else to say, what could that transition mechanism look like? What would it have to look like to be able to provide that bridge to the other side? And what would that look like? And to make your point, that's where most people having this fight about Bitcoin versus other. That's where they are right now, and nobody cares at that plumbing level. I do, because I want to know if I'm going to build long-term value, where is that value going to be long-term? I care a lot. And I couldn't start the VC fund until I could see, okay, now we can build on top of this that provides other value. But all of that plumbing is going to just be an abstraction. It's going to just give better value, and people are going to think about it every day. Right now, we're trying to teach how to use Bitcoin and how to seed phrase, and there's a whole bunch of education. It's really hard. The next layer of this is just simplifies it, and they're going to get value, tons of value out of things they use every day.
And I would just add, Scott, having you and I and everyone here have been in this industry for a while, it's hard to notice progress. We've actually made progress on that abstraction. I don't know if you remember 5 years ago, I spent a lot of time talking about SHA-256 and Byzantine general problems and like all this deep tech stuff, deeper stack stuff. And no one asks about that. The reason they don't ask about it is it worked perfectly for another 5 years, doubled its time horizon. So people just accept that it works. So we're making progress on that abstraction. People have already pushed that stuff behind them. Like people don't ask those questions anymore. And I think we're moving in the right direction.
So again, it's just a matter of time. But I've heard a few people mention, Oliver, I know Matt as well, maybe not so much Jeff, bullish on the idea of regulation, right? We're talking about this entrenched system that Jeff discussed. Regulators are clearly a part of that deeply entrenched system. So I find it currently a bit hard to believe that they have our best interests at heart when watching what's actually happened. So would it be fair to say, for me, I'm bullish on the idea of good regulation, but I'm not particularly bullish on the regulators who are doing it at the moment.
Well, it depends on where, right? I think
in the United States, correct. I'm speaking specifically in the United States. Yeah.
See, and this is the joy of being CEO of BittrexGlobal, is that we have nothing to do with the United States. We don't have any American customers. We don't allow anyone in America to be a member of our platform, and so I get to sit on the sidelines and take pot shots without really being invested. But I think I actually have a lot of sympathy for the regulators in the US because it's not their fault. Like, what are they supposed to do? If you are Gary Gensler and you've been given an act that was passed 90 years ago, right? If we really think that FDR in 1933 envisaged blockchain technology and cryptocurrencies, then like he's an even bigger genius than we thought he was, right? But if all you have is a hammer, the whole world looks like a nail, right? So what is he supposed to do? Of course, he looks through everything through the lens of, is it a 33 security? But there's a famous quote from Antonin Scalia, the former former justice of the Supreme Court. He says, it must be fascinating and exciting being a judicial activist, because you wake up every morning and you think, gee, I wonder what's unconstitutional today, right? And I think there's a possibility that Gary Gensler wakes up every morning and thinks, gee, I wonder what's the security today.
Yeah, but does he ever think about, gee, I wonder who I can protect before they get hurt today, as opposed to, I wonder who I can punish after everybody's already hurt today? Because to me, that's what I'm talking about here. I mean, even today, I understand that there may be some friction with the Voyager Binance US buyout, but it was news today that New York DFS, SEC now all want to block that deal, which would effectively just mean that, for example, customer funds who are just waiting to get paid back their 50 cents on the dollar would be used in lawsuits to defend against the SEC. I'm seeing a very major disjointed effort to protect consumers. It feels like they want to punish bad actors, which they should, but at the expense of the people they're supposed to be protecting. And maybe you have a different view.
That's not the SEC's fault. That's not the regulator's fault. That's the legislator's fault.
I agree. We need legislation. I agree with that.
Right, because the most successful regimes that are making progress on this, and there are a load of them, including the EU, including, it looks like now, the UK and Dubai and BVI and maybe even Hong Kong, we've seen in the last few days, they're getting to grips with this and saying, okay, what we had was not fit for purpose. It was not protecting people. It was not designed for the real world. So how can you blame the regulators in the US when they're working with tools that are 90 years out of date?
Yeah.
Can I ask a bigger question on
Go ahead,
this?
Jeff.
And it's fundamental, and this is probably, and this might also drive the emotion in Bitcoin maxis that at least know the plumbing at this level. And I'm so I can have a debate on it without the emotion, but this might drive others' emotion in it. But I think about this: if the emergent, so we all know what we've said, there are $400 trillion of debt in the world that's unrepayable. And so every single person we elect all over the world is effectively based on a lie that can be repaid and can manipulate money to repay it. And that manipulation of money is theft from some people to others. It's literally theft. We don't vote for it. Nobody has a vote in it. It's just a made up entry that steals money from some people and transfers it to others. And we live in that world. Ask yourself, what would the emergent complex behavior of the world look like in a world based on theft? And you would see a mirror reflection of the world we live in, getting worse and worse. And if that theft had to increase at a rate to protect technology going the other way that's supposed to give us more and more for less, if it had to transfer centralization, more and more theft, wouldn't the mirror reflection of the world just be a mirror reflection of that theft? And all of the song and dance of this regulator's good, Trump's good, Biden's good, wouldn't all of that just be just nonsense in that noise?
It is nonsense, but yes,
it's the complete I can't even
noise, right?
I can't even listen to it anymore and then you just have to ask yourself the other system, what would because all Bitcoin is a ledger, right? It's based on truth, right? It's a ledger. It's a decentralized, secure ledger based on truth. So what would the emergent complex behavior of society look like based on truth? And what you see is two different versions of a world, and one moving and people moving to the new one. And yes, people that are moving early will do better, but that's what's happening. All of the rest is noise. You cannot fix the system from the system.
Thoughts?
Yeah. Well, I mean, I think I have maybe more of a short-term view, which and honestly, a little bit of sympathy for regulators. That can be true eventually. In the short term, we have, say, centralized custodians that hold a lot of assets for crypto, and those can be made better. And I think what we've seen from regulators so far this year is not great, but it's not a death knell. And there are elements of it that make sense and are good. And I think from a short-term crypto investor's perspective, all you want out of U.S. regulators right now is not a death knell. And as long as that's the case, the market can continue to march higher. And that's why I think it's continued to march higher. If I think about the Kraken staking rule, not a death knell. If I think about BUSD and Binance stablecoins, not killing. If I think about the custody rule, again, elements of good and bad. So I think that's the short-term perspective. Jeff, I think you're talking toward a much longer-term perspective, again, to get to those two time frames.
Yeah, and I just think it happens faster than we think because of the incentive and what ends up happening. Because I can tell you, what I can tell you is this: I actually can't believe I get to work with the people I get to work with in this ecosystem, and I can't believe how optimistic and hopeful and everything else, and it's in integrity is there as well. It's literally like I'm watching what I knew was going to happen in the existing system that I wrote about, and you're building a new system with people that are building a new system that. And more people are moving into it all the time. It feels incredibly optimistic. It feels incredibly hopeful. Truthfully, that's actually why I don't want to debate in anger way about anybody with crypto or anything else. I would love them to see what I see because it's super, super hopeful.
I would agree that I think everybody here is hopeful. And Jeff, I would almost even argue that since we know that these other things are not going away, if you are a Bitcoin maximalist, that at this point, basically anything that detaches people to the system eventually pushes people towards Bitcoin anyways.
Yeah.
Right. I think we've seen that. It's like we saw what happened last year has pushed people to Bitcoin. It's pushed people to self-custody. It's pushed people to take their money off of exchanges. It's pushed people towards decentralization, whether Bitcoin or otherwise. So I would say that right now we're still so small as an entire community and ecosystem that a win for one is a win for everyone. And eventually it probably whittles down to very few people.
Yeah. And just double click on when you have an inflation rate and people are hurting and they're thinking, how do I make more money? And this isn't just individuals, it's all people. What they do is they take risks to be able to do that without understanding those risks, because they think they can make a whole bunch of money. And if you think about venture funds or pension funds, they're taking the same risks because what they're doing is they're trying to beat the inflation rate in real terms. Otherwise, the pension funds are insolvent. And so you have this massive money making the whole system more and more fragile because the system is based on fragility. Right? That's the incentive, and incentives run the world. Like that's what, these aren't bad people. They're trying to increase the hurdle rate to make sure they're solvent in a system that is insolvent, and it drives further and further and further. And that's what people don't know they feel in the existing system. And when you talk about venture funds and everything else, and they can make a huge return in these crypto investments, at least in the short term, and then sell them out, that's what people are feeling, right? Is just follow the money.
Oliver, what would you say right now, since you are obviously CEO of BittrexGlobal and touch basically everywhere, not the United States, where is the most favorable jurisdiction right now for legislation, or where are you the most hopeful?
That's a really good question. So I think the early adopters of regulation are still in the lead. BittrexGlobal is regulated in Liechtenstein and in Bermuda, and we picked those jurisdictions because they were the first ones to take crypto seriously and engage with it as crypto. I think the least successful jurisdictions are the ones that are trying to engage in discussions about trying to analyze crypto from a traditional framework. And is it a security? Is it a commodity? Is it a derivative? And the answer is kind of no, it's none of those, it's crypto. So what I look for and there's been a real kind of rush in the last, I guess, 2-3 months on jurisdictions pumping out proposals for new regulations. And what I look for as a metric of success is the extent to which it engages with crypto on crypto's terms, right? And so if you take Dubai, for example, they've just set up Vara. Vara's big marketing point is that they are the world's first crypto specialist regulator, right? Now, I don't think you actually need to have a specialist regulator. I think you can perfectly sensibly do it from within existing financial services regulators. But it's interesting that they have obviously done a market research that says that is a good sales point, right? That's a good marketing point. And I think what is necessary is for people to have the confidence in the system is to know that someone is getting to grips with what they're actually regulating. And I think when you have regulators, going back to the US is the classic example, there is a sense when it's this kind of ad hoc, sporadic, all of a sudden someone's eating their Cheerios this morning. Okay, what do you guys call it? Fruit Loops? I don't know.
Wheaties.
Sure. Whatever it is that they've eaten this morning, they've eaten a lot of it because there's a lot of activity. Actually, I don't think that gives people confidence that there's a guiding mind at work here. So, I think there are a lot of candidates for it. Leading the pack are still, and that's why we're regulated in Liechtenstein and in Bermuda. The EU's Melker regulation has a lot of good points if they can actually ever finally get around to adopting the damn thing. And the UK looks like it may be engaging on that basis as well. So the next year, we're going to be spoiled for choice.
Spoiled for choice sounds very positive. Not necessarily what I expected. I know we've only got a few minutes left. So Matt, I want to ask you timeline on an actual spot ETF approval, if you had to guess. Put everyone on the spot here.
Yeah, as Oliver would tell you, they already exist, just not here in the US. And
I know I'm so US centric. I'm sorry. In the United States, yes.
It's not going to happen this year, Scott. That's what we know. Bitwise doesn't. I mean, we don't know that, but that's what we believe. We don't have an application for a spot Bitcoin ETF. As you know, I was the CEO of ETF.com, so this is a space that I love. We think it's just a hard path forward right now. And the market's going to find other ways, crypto equity ETFs, futures ETFs, SMAs, but a spot Bitcoin ETF or a spot crypto ETF is strikes me as unlikely this year. Eventually we'll get there, but this year I have my doubts.
Jeff, do we even need one, or are we past that point and everybody should just be self-custodying?
So I think right now, I think people should self-custody. I think that's what people should do. But I think and that's actually why I'm really bullish on Fediment and Fedi, because it brings a middle way of self-custody. Because right now you have self-custody, which is hard for people, but the gold standard, and you have exchanges, and Fediment, that type of system brings self-custody or shared custody, I think, 2 billion. So I think it's actually one of the things that is an enabler for billions of people to join.
Oliver, any final thoughts that you'd like to share before we go? You get the floor.
Well, look, I think the self-custody versus on-exchange custody point is going to be very misleading ultimately, because I think if we go back to what we were saying earlier on, the ultimate goal is that people barely even know that crypto exists, and that it just fades into the background and enabling them to do things. I think the problem with self-custodying at the moment is it's extremely clunky, extremely cumbersome. The people watching this podcast may well be able to do it, but I mean this in a totally unpatronizing way. The vast majority of people in the world have neither the time, the inclination, or the technical know-how to do it. So we need to work out whether it's essential, and if it is, work out a way to do it much better if we're going to get people to actually engage.
And I do think that is happening, to Jeff's point. And I'm seeing a lot of it. I know he's seeing a lot of it. I'm sure all of you guys are as well. We've talked so long that Matt was able to go from nighttime to daytime. If you look at his window. So that's probably our cue that it's light outside. The zombies are gone. That is time. I really appreciate all three of you, the hopeful tone. Really trying now, as I said at the very introduction, I want to focus on the good and not the bad, because I think, as we've all pointed out, it's largely noise. And if you just zoom out, we're just in another 4-year cycle, and things are only going to improve moving forward. And I think, to me, that's sort of the lesson I heard here. We can eternally debate where it'll be built and how it will be built, but I think we all at least know that it will be built, which to me is extremely, extremely encouraging. Thank you, Oliver, Jeff, Matt, all three of you. I learned a ton. I know everybody else I can see in the comments really enjoyed this conversation. So you're all welcome back anytime. And thank you once again, everyone else. I will be back tomorrow at 9:30 a.m. Eastern Standard Time. Week on Fridays, as always, we will do the weekend review, which should be exciting. We can talk about all that noise instead of the signal, I guess. Matt, Oliver, Jeff, thank you guys very much.
Thanks, guys.
Thanks, everybody.
Bye, everybody.
That's dope.